Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is February 12th, 2024. How about that Super Bowl last night? Amazing comeback by Patrick Mahomes, and the Kansas City Chiefs go back-to-back for the Super Bowl win. But let's get back to the market. We have the Consumer Price Index this week, the Producer Price Index, and retail sales, plus we get some housing data. So we get some fresh data to see where we're at in the market. All right, last week's market recap, we had the equities came in with slight positive returns. Gold and bonds continue to sell off. And the number one headline was the S&P 500 finally hit the 5,000 mark. And that is an all-time high again for the S&P 500. The number two will be growth over value. And what does that mean if they're leading? And then number three, we have the yields going back up. And what does that mean? All right, as I said, the S&P 500 hit that 5,000 mark after gaining over 1% last week. Now, we've had 14 of the last 15 weeks positive. And why that's important? Because it hasn't happened since 1972. That is over 40 years of history that we haven't gone back to, and it happened in 1958 and 1964. And what happened 6 months afterwards? Well, one of them was negative, three of them were positive. There really is no pattern here. We really don't base our investment thesis on historical percentages, and if this happens, then that happens. But it is kind of very interesting to see, and this is kind of why, because it's all over the place and the variance is kind of high. All right, let's take a look at the number two headline, which is growth versus value. And value has never underperformed growth by this much. This is now at the lowest point since they started running this data since 1991. Okay, and this is the widest margin ever, and it's almost at a ratio now of 2-to-1. And here is taking a look at it from the November, just 3 months ago, and the growth benchmark is up 17.2, while the value benchmark is up 8.7. So almost again a doubling of what we are getting out of the value components of the S&P 500. All right, the market headline number three is yields are now going back up after, again, November, after the market turning around and going back up, and yields, when they reached 5, coming all the way back down to 4, are now above 4 again. They're hovering about 4.17. And with inflation continuing to slow, which is what the Fed is hoping, but we do get 2 data points, like I said, the CPI and PPI this week. So we'll get to see if this trend that we're starting to see, that yields going back up, will continue or not. And that will have a lot to do with what the Fed is going to do moving forward. And right now, the market's almost given up on the March rate cut. And right now it's sitting at 19%. And the May rate cut is about 50-50. So again, after we get that data, those numbers are going to change. But right now, they're pushing out the cuts because they're going to be cautious on cutting interest rates until they get some more data. All right, let's take a look at the S&P 500, the equity chart. And again, we went to add mode on November 7th, and as you can see, it just shot straight up, and now we're above 5,000. The market's up almost 15% since that time. It's up 5.4% year to date, all driven, a lot of it driven by the growth and the mega tech companies out there. All right, let's take a look at the bond market. Bond market, again, we also started adding bonds back into the portfolio on November 7th, and it shot up. And as you can see, they came back down. Actually, the bond market return year to date is -1, and it's sitting right on that line where we possibly, if it breaks that line, we will go back to protect mode, which means that interest rates are going back up, inflation starting to ramp its head again. But right now, it's bounced off there a couple times. We got to wait and see what happens here. And again, we're going to be collecting data too yet to determine whether or not we go to protect mode or we stay and continue on with the bonds that we have. All right, let's look at the top 3 market movers for this week. On Tuesday, as I said, we get the consumer price index. Expectations are also to have risen by 0.3. It rose 0.3 in December. And then on Friday, we get the producer price index, and their expectations are to have gone up only 0.1 when it actually went down 0.1 last month. And on Thursday, we get U.S. retail sales, and expectations after a nice December are -0.2 for January. So we'll see how that affects the market. All right, here are the listing of the corporate earnings this week. Some of the big ones are Shopify, Airbnb, so we can see if the short-term rentals and is it affecting them, this inflation. We also get the behemoth Coca-Cola, John Deere, Coinbase. Bitcoin has been running quite nicely here. And then we get DraftKings after the Super Bowl and the betting world. All right, that's it for this week. Thank you for joining us. Our next update is Monday, February 19th. As always, continue to subscribe, like, and follow, and we'll see you next week. Have a great week trading.